Good evening. This is James Perry at Perry Capital in Miami. It's July 13th. Today, we're going to talk about the markets, the valuations, all major portions of it, stocks, bonds, credit spreads, foreign exchange, commodities. We're also going to talk about portfolio positioning and asset allocation with the second half of the year. We see opportunities and a lot of things are going to change, and we have to be well positioned for the changes that we expect. We are obviously going to talk about domestic economics and international economics. We'll talk about domestic policy and geopolitical developments as it applies to the risk investors are going to be facing into the second half of the year. We look forward to it. Stay tuned. Here we go. Okay, stock markets first. The S&P 500 is up 7% this year and 11% in the last 12 months. The Nasdaq's up a little bit more than that. QQQs are up a little bit more than that. The Mag 7's up a little bit more than that. And Nvidia's up a lot more than that. It's up 30% on the year. We also have 10% of the portfolio in gold. That's up 40%. No surprise, Perry Capital is beating the S&P 500 once again this year. The other significant change in the portfolio was that I took off my dollar hedge. I had been long Swiss francs versus a large portion of my dollar currency, which did very well. Swiss francs up about 10%, so that's added a little bonus to the portfolio performance. Gold and crypto, I would say gold continues to be the best hedge as a real asset. Crypto, I sold some actually last week, and the reason for that is the rise of the stablecoin, which represents a potential risk to crypto in the sense that for tokenization in a big scale, in a larger scale, to proceed, stablecoins and tokenization are going to have to be part of the equation. The other thing I wanted to say about the investment market story is that it's very important to understand that we took our hedge off in the Swiss franc because the dollar, I think, is probably stabilizing and poised for a rally. That's important. FX market gets it first. Second thing is that gold and crypto have been the go-to hedges for everything going wrong, and rightfully so. Gold probably more than anything, and that's our biggest position, and it's up 40% this year. Crypto, I sold some, believe it or not, this week. I've had a little bit of it for a long, long time. And the reason I did isn't because I was using it as a hedge necessarily. I just kind of wanted to follow it and see what was going on. But the point is the rise of the stablecoin due to the deregulation in the tokenization of financial assets is really speeding up here, and I think it's quite interesting. And stablecoins are different than crypto in the sense that they're backed by US dollars, right? So number one, that gives you a demand for a bunch of more T-bills. I think 250 or 300 billion T-bills are already purchased to support stablecoins, but also that, I think the deregulation pace is speeding up, and I think that is a little bit of a change. So I'm watching it closely. I'm not an expert. I don't pretend to really know much about crypto, but I do think a lot of people are punting around in it, and it's an unbelievable speculative asset, which has been extraordinary. So I just wanted to mention that. I'm watching it closely. Anybody have any great ideas about it or opinions about it that I don't know about? I would love to hear them because it's changing our world rather quickly. Okay, after the markets, the next thing I like talking about is the economy. And again, a lot of people are much more bearish on it than I just look at the data and I look at the employment part of the economy first. The job market is strong. The labor market is strong. It's never been larger. It's much larger than official statistics suggest. And I think the immigration story gets a lot of press, and it's not done properly, and it hasn't been done well, and there's a lot of misinformation and a tremendous amount of emotion behind it. But the bottom line is there are probably 20 million illegal immigrants in this country, and the majority of them, the vast majority of them, are hard-working, good, decent people who are just trying to make a living for their families. And I'm all for it, by the way. I think the immigration system in this country is deeply flawed, and it needs to be fixed. And it should have been fixed before it became as an emotional issue as it is. The point is that we should probably be letting something like 4 or 5 million people in a year, but let's just vet them to make sure that they're not terrorists or criminals or murderers or worse. There is a shortage of jobs in this country, probably 7 million, and we need workers, and we should get it fixed so that people can come into this country and work. And the sooner we do that, the better. The second thing I would like to say is that with respect to the housing market, there's a shortage there too, right? There's a shortage of 3 million homes. So the idea that the housing market is rolling over, I just don't really embrace or have a tremendous amount of confidence in that point of view. And the reason for it is that if you think about mortgages, sure, everybody would like them lower. Every real estate speculator and developer would like them lower. Banks would like them lower. They make more profits. But I think if you think about the proposal that's being initiated by the administration about reducing state property taxes is a much bigger deal than, say, the Fed funds rate going to 4% or something like that. If you eliminate state property taxes and allow people who own houses to keep that money, it chokes off excessive spending, for one, and it puts that money right back in the pocketbooks of the people that are buying homes. That will make a much bigger difference than a mortgage that's 6.5% or 6% rather than 7%, right? So anyway, a lot of of changes going on in the property market. I think they're all good, and I think the economy is going to do very, very well because of consumer spending and business investment. And I think that GDP will surprise on the upside as we go forward, as will corporate profits, which you'll start seeing next week. If you would like to subscribe to a more comprehensive research, strategy, and asset allocation newsletter, which explains our investment process, you're welcome to do so. Hit the link below and contact James McCormick, who is in charge of our business development team. He will be happy to schedule a conversation with Perry Capital at your earliest convenience. Thank you very much. Have a nice rest of the weekend.